Is the global banking landscape changing forever? What is going to happen with lending for internationals in the UK? And what can we expect from the economies in the UK, the US, and Europe in 2021? That's what we're looking at today in today's video. Welcome to Momentum Property Education. My name is Daniel Wood. I'm one of the founders, and every single Tuesday we dissect the global news, the global economy, to see what do we do as property investors. How do we treat this to have the best opportunity to succeed? So welcome to Momentum Property Education. Please make sure you subscribe to our channel so you get these updates every single week. Make sure you like it because that affects your YouTube algorithm to tell YouTube this is the type of videos you enjoy and that you want to get more of it. So please click the like button and click the notification bell. So welcome to today. We got a lot of news, a lot of things to look at. Let's start by digging into the UK economy, the European economy, and the US before we look at how the global landscape of banking is changing and what that is doing to the central banks. And finally, we're going to look at the lending. On Tuesday last week on our news update show, we looked at how insurance companies are actually blocking mortgage brokers and banks from lending to internationals. We've had some major developments on that, so we're going to come back to it now at the end of this episode and share what does this mean for you and what has happened. So welcome again. Thank you so much for joining us. Let's get into the numbers in the UK. So the UK is doing very, very well. With everything opening up, things are expanding, things are growing, which is very, very exciting. Q2 saw growth in the business sector. It's still down about 10% compared to pre-COVID levels, but the expectation, based on Bank of England's figures, is that it will grow to catch up to pre-COVID figures by the end of the year. And actually, in 2022, it's expected to grow to a level about 1% higher than without COVID it would have been. So the growth looks very, very exciting. And that is obviously very, very good news. Now, one of the major parts that has been affected by COVID and now by the opening up is the retail industry. Regular shops are actually back to about 92% of the pre-COVID levels. What we're seeing with this recovery, it's not affecting all industries equally, not all businesses equally. Shopping centers are only up by about 67% back to 67% of pre-COVID levels, and high street stores are only back to 68%. So there's still a lot of growth in shopping centers and high streets to go to while people are moving and buying more from stores that are maybe less central and therefore hopefully less crowded because there is still that carefulness around COVID. We see the same in different industries. Logistics job listings is actually up 300% compared to pre-COVID levels, while graduate openings is only up to 84. So there are differences in different industries, but overall the economy in the UK is lifting well. We don't know what's going to happen now. The UK market is set to start opening up, but it looks like that might be delayed with the growth of the Delta variant of COVID. So there are different factors at play, and we're not completely sure of what's going to happen. Businesses are making strategies for both scenarios, where we open and where we don't. So we'll see how this develops, and we'll keep an eye on it. So on Tuesday next week, we'll have more updates and more information. So again, make sure you subscribe so you get those latest update news. So that's the UK market. Great growth looking right now. We'll see how it continues, but the expectation from the Bank of England is that it will go very, very well. If we go over to the Eurozone and the US, right now they have a lot of things very, very similar. Manufacturing is up through the roof. Manufacturing is delivering so much, which we've obviously seen in the UK. Last week we talked about how build costs have gone up because of the lack of supply. While manufacturing is trying to keep up, they're trying to expand, they're trying to send out more product, and so that is growing that industry both in Europe and in the US. The service industry is up, not as much as manufacturing. So the Purchase Management Index for manufacturing, Purchase Managing Index is basically how much are firms buying. Because the more a firm is buying, it's because they want to use this to deliver more. So it's a way to predict if firms are buying a lot of resources, it is because they're trying to expand. So the manufacturing's PMI, as it's called, is over 60%. It's actually over 65%. So that's going really, really well. service industry is to a PMI of 55. Now, everything over 50 means growth, everything under 50 means drop. 55 is, and it's over 55, is actually the highest it's been in the last 3 years for the service industry. And what's really impressive is that confidence of growth forward is actually the highest in the past 17 years for the service industry in the Eurozone, which is incredible. Costs, though, are predicted as well. PMI is showing that costs are going up by, PMI is about 65, meaning costs are being driven up. We'll see what that exact number is. And we're seeing this with the inflation. I'm going to circle back to inflation in a moment. The U.S. economy is having a very, very similar there to the Eurozone. Manufacturing is up, service is up, costs are up, and unemployment is down. Unemployment is actually down to 5.8% in the U.S., which is really, really good. Now, we're getting a lot of inflationary pressures here. The U.S. expects to have inflations of 5% plus in 2021, but that does not necessarily mean it's going to continue. We don't know. I expect it will, because these stimulus packs have been pushing out, and so there needs to be some inflation happening. There needs to be some of that because, well, the U.S. dollar has been 24% of the entire U.S. dollar supply was printed in the last 12 months, which will have an impact on the economy. We'll see how much. Right now, it looks like the U.S. is going to have about 5%. They're expecting closer to 4% in the EU zone, but we will see where that ends up. So stay tuned. Make sure you keep yourself updated. What do we do as property investors in inflation? We sit tight, we hold, because that means our properties are going to go up in value. We talked more about this last week. We talked about if the values go up while our loans stay the same, we get wealthier. It's easier to pay back our loans, our rents go up. So as long as we don't get hyperinflation, which means we have extreme inflation, that's when people can't run to the store quick enough with their with their barrels full of money because, well, the money is dropping in value and will lose value just on the walk from their home to the store. That is a problem that does not benefit us as property investors, but 5 to 10%, a high inflation, actually is very beneficial for us as property investors, although it can be very detrimental to the economy overall. So be smart in your investments and make sure you have multiple streams of income coming in to keep yourself safe. Now, let's look at the lending situation, because I gave some bad news last week where some insurance companies are not giving mortgage brokers an increase or allowance to work with foreign investors. They're not allowing them in their indemnity insurance to work with foreign investors. And that could be a problem. The good news is we're seeing that a lot of the industry, so it's kind of split into two camps. Some are not, and a lot of them still are giving out that insurance policy and allowing mortgage brokers to work with and allowing banks to work with international investors. I hinted at this last week that we know the UK needs international foreign capital to help the building industry and keep that growth, and especially with it leaving the EU and with COVID, they need that. They can't block it. But that was some bad news last week. The good news is it turns out that it wasn't as bad as we thought, and things are moving well. So we are in good shape there on the lending. We got our mortgage brokers in Momentum Property Education. The ones we work with can still offer internationals lending, so we are in good shape. I'm actually refinancing some of my properties now, so that is all good news. So thank you so much for joining us here today. As you can see, we have growth in the economy and we have the lending. Our final piece of news that I want to share before we end is a potential change to the global banking landscape. El Salvador just announced that Bitcoin, a law was passed that Bitcoin is now a legal tender in El Salvador. What does that mean? Well, legal tender means that it is the currency of the country. So for example, in the UK, if you go to a store, they have to accept pounds. They might not accept cash, you might need to use a card, but they have to be able to price things and accept things in pounds. In Sweden, Swedish krona. In EU countries that are using the euro and the US dollars. So they have to accept that currency. What's now happened in El Salvador is companies in the next 90 days will have to accept Bitcoin. Now, what does that do? Well, El Salvador is doing this because they don't actually have their own currency. They've been using the dollar. And with the US printing so much dollars, it's actually very, very damaging to the El Salvadorian economy. So therefore, they're protecting themselves with Bitcoin because no one can decide to print more Bitcoin. Bitcoin is printed on a mathematical formula that is predictable. It is what it is. No one can change it, and that's what the El Salvadorian government has chose to bank on, is that will allow them to stabilize their economy. This has caused a lot of South American countries to want to follow. We're seeing even African countries want to follow, and some Middle Eastern countries looking to follow. Now, a lot of the central banks are speaking up against this. They've been looking at creating their own cryptocurrencies, but when these countries are going in, what it does is the central bank uses two mechanisms to affect the economy. One is print more money when needed, and the other is raise interest. So when we have a tough time in the economy, when it's slow, they say, let's print more money. They flush the economy with cash and it grows. What are we seeing right now after COVID? Big problems. Well, they printed money, and that allowed the economy to stay alive and now even grow. On the other side, they have the interest rates. They can push it up to stop us from spending because our home mortgages are going up. Interest on our bank accounts are going up, so we'd rather put money in that saving. We have to pay more for the loans, and we spend less, so it calms down the economy. If they lower the interest, the opposite happens. We want to spend. So we're very predictable people, and they have these two levers. Well, if more and more countries shift to cryptocurrencies that are based on a mathematical formula, one of these levers goes away, the printing of money. They won't have that same power anymore. So a lot of the central banks are speaking up, saying, well, this is not a good development, this is what it is, and we'll see where this goes, because it can have some incredible ramifications, because cryptocurrency is bringing something called DeFi. That's called decentralized finance, meaning you'll have blockchain-based lending coming out more and more in other financial products. This might affect us incredibly in the UK market, in other markets, as people want to buy property. So we'll see what the development is. As well, we know that Land Registry and other countries are actually looking at putting the deeds of properties on the blockchain, which would allow the solicitor process that we know is way too long to actually go faster, because it will be automated through blockchain technology. So there's a lot of things going on right now in the market, and we're going to keep a close eye on this to see how does this affect us going forward, and what do we do as property investors. For now, make sure you're buying the right deal in the right area with the right strategy. So do your due diligence, don't trust someone else, and make sure that whether the market goes up or it goes down, your property deal will be good. That is important. It's as Robert Kiyosaki said once when I saw him speak. He said, investing, most people see it as flipping a coin. Either the market goes well or it goes bad. It goes with you or against you. And whatever happens, you will have that effect. What they forget is the coin can land on a third side. And your job as the investor is to stand on the top of that coin, and whether it falls, economy up, economy down, you should be a winner. So make sure you're buying the right deal for the right reason in the right area. And remember, the right deal can change your life forever. See you soon.